This is a trade that made me $6,200 on my 10K account, and I'm going to be explaining the logic behind this trade. This strategy I'm about to teach you is a framework that have helped me and many traders pass their profit. And it's actually a very simple rule-based model that I highly suggest any trader, regardless of the trading style, because it's a universal model to trade with. I'm going to explain everything you need to know about it, and by the end of this video, you'll be able to start trading instantly with this model. And I promise you, if you stick through the video, pay close attention, this strategy will get you funded or get you to start making results, similar results like this. And I'm not just capping, you can actually click the link in the description to check out testimonials from traders that are actually trading this model. This is a popular model, so it's not something that is new, right? But it's a model that actually worked. Right, so I'm going to explain the logic behind this thing. So if that sounds like something you're interested in, go ahead and hit the like button and also subscribe to the channel. I'm not going to waste your time. This is the logic behind the model. Now, the first thing we want to do is to find the entry model. So the entry model is simply this. Now, the entry model can actually come in two ways, right? So the first way it can come is that it can come in form of a liquidity sweep, then a break of structure, then a second break of structure. Then this previous lower high will be forming as the structural liquidity. Then we take our entry at this place, put our stop loss at this place. And the second way this can occur is like this. We have a liquidity sweep, then price first and form the structural liquidity before we have the actual break of structure. We place our stop loss at this place and put our um, TP. We are going to take a fixed trade out or put our take profit at the external range liquidity. So that's the rules of the strategy. Once again, what are we expecting? Basically, we are looking for liquidity sweep, then a break of structure, and we want to see structural liquidity. Now, if the structural liquidity didn't form before the break of structure, the next break of structure will serve as the structural liquidity. We are expecting it to get induced and so a price will take out that low to tag us in. But if the structural liquidity was formed before the break, we can actually take it. And we want to see this thing happening, this pattern happening on our, this entry is happening on our lower time frame. So we want to see this pattern happening inside our intermediate time frame point of interest, right? So if this is the 1 hour, I told you guys this is a universal model. So if this is happening in the 1 hour, we want to check to see if this thing is actually occurring in the 4 hours time frame point of interest. So if it's occurring in the 4 hour time frame valid point of interest, don't worry, I'll explain what I mean by valid point of interest. Then we are going to look to see if it's in line with the trend. Then if it's in line with the trend, you're going to take an entry. Don't worry, this might not make sense for you now, but I'm going to explain it. So now this is actually a trade record, and let's try to draft it out. So what do we have here? First of all, this is the pattern we have, this same pattern that I told you guys. So what do we have here? We have a liquidity sweep, then we have price forming a structural liquidity. This is the second pattern, this pattern we talk about. We have price forming a structural liquidity before the break of structure. Then after price break this structure now, we are not going to place our limit order. We are going to just put this PNL indicator, but we are not going to place it yet. So we want to look to see if this pattern, now we have gotten this pattern like this, we want to see if it's occurring on an intermediate time frame point of interest, on an intermediate time frame valid point of interest. Then if it's occurring on our intermediate time frame valid point of interest, we go to see if this trade is in line with the order flow, with the prevailing order flow, which is with the trend. Or we go to our higher time frame to see if it's in line with the higher time frame trend. This is a bullish setup, so it's the higher time frame bullish. So that's the logic behind it. Now, as we have found our entry, let's say price is somewhere around this place. So at this point, price is somewhere around this place. It's still at this place, retracing. So we want to know whether we have gotten the rules of our entry model, which is liquidity sweep, structural liquidity, break of structure. So, but before we take this trade, we want to see if this whole setup is occurring in our intermediate time frame point of interest. So, what's our intermediate time frame point of interest? So, since this trade was taken, actually, it was taken in the 1 hour time frame, we go to our 4 hour time frame to see whether it's occurring on a higher time or on a valid point of interest. And what can you see here now? Don't be, I know you guys are confused with this entry, with what I'm taking. You can either take the order block or QMI. This is called QMI. It's actually the, don't I'll explain that in a bit. So you can see that all these things actually happening in this order block. It actually happening in this order block, and it is valid. So now let me explain what I mean by it being valid now. What we are looking for is we want to take the order block. I don't like to take order block that is in the middle of a price range. I want to take an order block that is in the extreme of the price range. I don't take order block at the middle of the price range. So that's the rule of, that's what I use to look for valid order block. The other one order block is this order block is actually valid, but I don't like it. And the reason for that is because sometimes it's sitting at premium, and I just prefer the ones at the extreme. So this is what I mean by order block in the middle of a price range. I don't take it. So this is what I the ones I look for. The one that is at extreme of the price range. So if you look at this thing, now you can see that the market is actually forming series of higher highs and higher lows, higher highs, higher lows, higher high, higher low. Then price forms this last price range. So it will retrace to this point. So at this point, we are expecting price to take out this external range liquidity, right? So since this pattern is occurring around this place, it is valid. So you see what I did here? I started from the lower time frame, the 1 hour time frame, to find my entry. Then once I find my entry, I now go to the intermediate time frame, which is our 4 hour time frame, to see if it's occurring in a valid key level, on a valid point of interest. And yes, it's occurring in a valid point of interest, which is the other block at extreme of the range, right? And you want to make sure that the range is valid, because of, you see that, you know what is a range. After a break of structure, you get a new range. So this is a range, right? This is a break of structure, higher high and higher low. So this is the range. So this is occurring here, so it's valid. And then the next thing I want to do is to go to the higher time frame. These are 4 hour time frame. So the higher time frame will be daily, to see if it's in line with the trend. Now, to find your directional bias on the higher time frame, you don't really need to complicate anything. Just look at a couple of candles, maybe the last 50 candles, and try to see, is the trend bullish? Are you seeing more of huge bullish candles than bearish candles, right? So the bullish candles, are they more aggressive? That's how you'll be able to spot it. You don't need to complicate it or use indicator. And you can clearly see that there's more of bullish candles here. The bullish candles are actually many, and they are huge. There's very little retracement. So clearly, even a toddler can identify that this is actually a bullish trend. So now, remember what we did? We found our entry model. Then we go to our intermediate time frame to see if it's occurring in our intermediate time frame point of interest. Then we go to see if it's in line with the trend. So that's the basic rule of this strategy. So in summary, the first thing we want to do is to look for one of these patterns. Now, after we find our pattern, we want to go and see if this pattern is occurring in our intermediate time frame point of interest, right? So as you can see here, what do we have? We have our pattern, which is liquidity sweep, structural liquidity, break of structure, or this, in this case, is a market structure shift, right? A market structure shift. Then before we take our entry, we go to the higher time frame, our intermediate time frame, to see if it's occurring in a valid point of interest. Since we are working with the 1 hour time frame, our intermediate time frame will be the 4 hour time frame. Now on the 4 hour time frame, you can see that this whole reaction is occurring on this valid order block, right? Which is this order block that is at the extreme. And if you decide to read the market structure here, you can see low highs, lower lows, higher highs and higher lows, higher high, higher lows. So as price created this, and this whole retracement is for price to continue to the upside, taking out this place. So since this reaction is occurring at this point, so this is actually a valid market structure shift to extend to this place. So now once we see that it is valid, that is occurring in a valid point of interest, the next thing we want to do is to see if this whole thing is occurring, is in line. This whole setup, this is a bullish setup. So we want to see if this bullish setup is in line with our higher time frame order flow. So we are working with the 1 hour. Our entry model is on the 1 hour time frame point of interest, which is our intermediate time frame, is on the 4 hour time frame. Then the next time frame, higher time frame should be the daily. So now on the daily time frame, you just want to look back a couple of candles to see if it's like 50 candles or thereabout, 50 bars or thereabout, to see if the trend is bullish or bearish. And as you can see more of huge bullish candles than bearish candles. And this is how you can spot your buyers, nothing more. So I hope you guys understand what I say, understand this video. If you guys like it, as always, don't forget to like the video. And also, we are actually taking a challenge here. We started the challenge. We are looking to accumulate 200K in profit capital. Right, so we are going to start with the smallest profit. This is a challenge that I've done myself, and I'm trying to bring it up with my group. Right, I want to take it along, so you guys will get to take the exact setup I'm taking, use the same risk management, use the same profit I'm taking, and duplicate my results. Right, replicate my results. So if that's something you're interested in, you can definitely send me a DM on Telegram. I'm very active on Telegram. You can send me a DM there, and I will fill you in if you want to join. And also, I usually post setup like this. Even this setup, I usually post it in my free Telegram channel. As you can see, this is when I post it. So that being said, I hope you guys like it. As always, do the needful, like, subscribe, comment your question, and I will get back to it. And I hope to see you guys in my next video.